Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, including news about the rise of the importance of the Chinese currency, even as its exchange rate falls. The recent sharp decline in the value of the Chinese yuan is worrying its trading partners. American officials and politicians, along with some other Asian nations, think China is intentionally keeping its currency below its true market value to give its exporters an edge over competitors. When the words currency manipulation start to be used again by its rivals, especially the US, we can expect to hear more about trade wars. Maybe one reason China's rivals are worried is that its currency could quickly become a key reserve currency. In an astonishing conclusion in an ANZ report to be released today, ANZ is predicting the liberalisation of Chinese financial system will unleash a flood of capital into the global bond and equity markets, and Asia's financial system will be larger than the US and Europe combined by 2030. It will be a tectonic shift, they say. Later today, we get the closely watched flash PMI data for China for March. At the end of last week, markets closed slightly down. Gold and oil rose marginally, and benchmark US Treasury 10-year yields were up to 2.74%. Yellen signalled that the Fed is starting to think about rate rises next year, kicks off more bond price reassessments. Bonds may be in for a hard time. Our swap rates took a breather on Friday, but their future depends now a lot on the size of the rush to fix mortgages ahead of the expected regular hikes in the OCR. Ahead this week, there is little data out, but Fonterra releases its interim results on Wednesday, and with it an expected update on its payout. The New Zealand dollar had an uneventful weekend and starts the week at 85.3 US cents, 94 Aussie cents, and the TWI starts at 79.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.